How do I go to my dashboard? Hello. I don't know why I can't. I don't know why I can't. I don't know what my screen is sharing right now. I don't know what my screen is sharing right now. So what's happening? I can't see anything. What's happening? I can't see anything. What's happening? I can't see anything. It's on EU. Oh, okay, okay. I'm just trying to fix my Streamlabs. Editor, editor. Okay, all right, perfect. Yeah, I'm just gonna turn it back on really quick, and then I'll start in 2 minutes. My voice is echoing. Oh, actually, I don't think it should be echoing anymore. All right, I'm gonna get started here. Just let me share my screen really quick. Can you all see my screen? Beautiful. So this is the trade I took today. Thank you, thank you. So this is the trade I took today, and yeah, I just annotated it out for you guys. This will be included in the weekly review at the end of the week, but I just annotate this to kind of show you guys how I look at price. For today, it really wasn't a day that I wanted to trade, but this setup looked too clean, so I just ended up trading this. Where we traded under the 7:30 a.m. open, get that SMT divergence with YM, and as I've previously mentioned is that from my personal screen time and experience, is that you'll generally see YM likes to front run ES or NQ. So here we have SMT Divergence, right? And then YM's already running higher, which makes me lean bullish. And so essentially, as I've posted on Twitter as well, all my model is just a higher time frame PD array, SMT Divergence, and then we're looking for a market structure shift, balanced price range, inversion, fair value gap, or whatever your entry is, right? And then number 4, the most important, is just trade management or risk management. So this is my this is my model right here. Like, this is it. It's not very complicated. It's very simple. Annotate the YM SMT. Yeah, I got you. So on YM over here, you can see on these lows over here, right? Over here we have that SMT where NQ takes these lows out over here, and then NQ, YM doesn't. And you see YM start running higher first before NQ even does that. What model did I use? I just used my own model, right? Like, this is my training model right here. I'm gonna make a video on this as well, but I like to put it out there for you guys to Oh, for number 3, okay, I'll show you. I actually use turtle soup. I'm not gonna lie, but that's something I don't really want to teach to the public right now. Just another thing, like, in respect to Trader Day, because he teaches me. But if you go down to the 15-second, I'm sure you'll find some sort of entry, and I'll show you guys that in a little bit right here. Right, so I'll make a video on this right here, highlighting everything I look at. But this is essentially all I'm looking for to get a trade in. Is I need a higher time frame PD array, I need SMT divergence, I need a market structure shift, balanced price range, inversion, fair value gap, or even a turtle soup entry, right? And then number 4 is just trade management, risk management, which I've posted a live snippet on my YouTube channel if you guys want to check that out, where I was in a live trade and I was just, managing the trade as it's going. So here we can now look at the 15-second chart. Right, so if you're inside this turtle soup, for example, within this turtle soup right here, you're gonna have multiple entry opportunities, if that makes sense. So here, let me move my model checklist over here. And so if you're looking for one of these entry techniques that I like to use whenever we get SMT within a higher time frame PD array, right? Then I'm looking for, okay, well, here's a market structure shift right here. So that could be one entry. We don't necessarily have a balanced price range here, but we do have a inversion fair value gap, right? And so over here we have another inversion fair value gap, and we also have a balanced price range. So there's a bunch of entry opportunities here for you guys. You guys just have to, I think at the end of the day, what really matters is just that higher time frame narrative, right? That tells us whether we're going higher or lower. Can you explain what you mean by YM front runs ES and NQ? What I mean by that is that I generally, just from my screen time, whenever I'm watching NQ, ES, and YM all together, is that YM will generally go first, if that makes sense, before the other markets. But that's just an extra confluence you can use. So for example, I'm expecting higher prices. YM creates that SMT divergence and begins running higher before NQ and ES even begin running higher. And so that's already one clear indication that the indices could be bullish right now. And then it aligns with my narrative. And that's why I use it as an extra confluence. Not something I thoroughly back tested, but just something that I found was interesting in my, like, throughout my trading career. Can you explain how to trade with SMT divergence? Yep. So for SMT divergence, I'm just gonna explain it for index futures here. You're gonna have three markets, right? The main markets I'm looking for are NQ, ES, and then YM. Okay. So these are the three markets I'm really looking at majority of the time. If you want, you can also look at DXY, which I do look at every morning just to make sure that everything's in alignment. Right. You guys have to take it with a grain of salt. Every concept that you learn has its own probabilities, right? So just think of it like this. Think of it, okay, the unicorn model, right? Why is it so effective? Is because you have three confluences together. You have an order block, you have a breaker block, and you also have a fair value gap, right? At the end of the day, high probability trading is just a lot of confluences coming together. So let's put into perspective. For example, let's say the order block gives you 33% chance that you're going to win a trade. Let's say the breaker block gives you 33% chance that you're going to win a trade. And let's say the fair value gap gives you 33% chance of winning a trade, right? And so whenever you use the unicorn model, why is it so high probability? Is because you're adding 33% chance on 33% chance on 33% chance. And because you have three confluences of really high probability things, now you can expect 99% chance of it hitting your profit. Obviously, it's not 99%, but just some examples of high probability trading, right? So here we would, for index features, we would be looking for NQ, YM, and ES, right? So here we can look for when one market makes a higher high or lower low and another does not. So these are all correlated markets where they should be moving in tandem, meaning when NQ makes a higher high, YM and ES should also be making a higher high, right? So what happens when one of these markets fail to make the higher high? Well, that would be a bearish SMT divergence because the market is essentially tipping its hand to you that there's a cracking correlation, meaning there is some sort of institutional manipulation going on in one of the markets because they're all correlated, right? So let's say ES fails to make that higher high. So now we have SMT divergence on the highs, right? Because ES fails to make the higher high, Y makes the higher high, NQ makes the higher high. That would be your bearish SMT divergence. Vice versa, if we are looking for a bullish, okay, actually, let me highlight it like this. Actually, I shouldn't say PD array. I'm going to say higher time frame level because sometimes you will see we take external range liquidity and then we drive back down or up. In this case, it would be down because it's a bearish SMT divergence. So if we're taking the same thing, right, we're looking for lower lows in the correlated markets. So we're looking for lower lows in correlated markets, right? So what happens if one market fails to make that lower low is then you'll be looking for that SMT divergence that occurs, a crack in correlation, right? So right here, making lower low on YM and NQ, but ES fails to make that lower low, then now you're looking for a bullish SMT divergence where the market may potentially want to go higher from this point. So right here, once again, you can look at it as a higher time frame PD array right here, for example, or higher time frame level, right? And so you're looking for that SMT divergence within that level to confirm that you're most likely going to get a some sort of reversal in the market, if that makes sense. And then this is really where you would be looking for that liquidity sweep combined with SMT. Yes, that's always better. So one thing that you guys can keep in mind is that the market that fails to make the lower low or fails to make the higher high, in this case, it would be ES. The market that fails to make that new high or low is generally going to be more volatile. Okay. So that means it's going to go further. So if you want to trade, this is how I determine which markets to trade with SMT. Okay, so which market to trade with SMT Divergence? One, clear drawn liquidity. That's very important, okay? You need a clear drawn liquidity. And two, if you want a more volatile market, the market that fails to put in a new swing point is the one to trade, okay? And then if you want a more clean trade, then the market that puts in the new swing point is the one to trade. Okay. Is that clear to everybody? Yeah, so right now, in terms of turtle soup entries, I don't really want to teach them just because personally I'm still studying them as well. Yeah, but that's essentially how I would use SMT divergence in the markets, right? Let me screenshot this. If one index creates a higher high, lower low, and other creates equal high, equal low, is that still considered SMT? Yes, I still consider SMT divergence. Once again, it comes down to that confirmation, right? Where it's like I'm looking for that market structure shift, balanced price range, inversion for value gap. And it has to happen at a key level as well. That's very important. News is the number one the most obvious way to tell if some day is low probability or high probability. It's news. So for example, today in my weekly outlook, actually I posted my weekly outlook yesterday, but looking at the news events, right, I would expect Monday to be some sort of low probability, because if you're using quarterly theory, for example, then we have no news on Monday, but we have CPI on Tuesday, so we can already start anticipating for AMDX profile for the week, right? And today we did get an expansion, which is well, I wouldn't say this is like very clean expansion. Actually, let me look at the daily chart before I say anything. I think it was a pretty clean expansion in terms of you know, in terms of like price action. I don't think it was the cleanest, but like expansion wise, it is expansion, you know what I mean? So now whenever we take time-based liquidity, this is something I was also highlighting for the Discord, is that you want to pay attention to time-based liquidity. So this is actually previous week high. So once we took that, how are we respecting price? Well, it's supporting price now, right? So we can look at previous week high as retail support and resistance, right? Because I always ask you guys, when does retail support and resistance actually work? And that would be your time-based liquidity. And that's also why if you use IPTA data ranges, you'll find that at the IPTA 20, 40, 60, those levels are generally respected as quote unquote retail support and resistance as well. Or you say that your most current win rate is? Um, I do sometimes struggle with over trading, but in terms of New York AM session trades, I would say it's probably around like 70 to 80% win rate right now, just because of the way I manage my trades. Um, for example, if you look at my trade management video, the live trade management one, like you'll see how I like to manage my trades, and I'm really like entering on the 15-second chart, and then I'm waiting. I need displacement like right away from my trade, and how I spot to look for that expansion is essentially SMT divergence. And I'll have like a full lecture on this. I'm just kind of trying to figure, like right now I have a bunch of content lined up, but I'm just trying to figure out how to incorporate my face cam into it, because my lectures are very like somewhat monotone. So if I include my face cam, I think I might look a little depressed, you know? Exactly, Jomar. I think the core content series are honestly, like if I were to watch any series from ICT, it would be Market Maker Primer course number one, and then number two is just core content, and then number three would be 2022 mentorship. So CPI tomorrow, are you expecting Tuesday low of the week and then expansion? Honestly, at the rate we're trading right now, I'm low key expecting Tuesday high of the week because we're expanding higher, right? So if we get that, it's like really right now, going into Tuesday, right? If we're looking at a larger scale, like let's say the 1 hour, 4 hour. Okay, let me hide all of these drawings really quickly. I'm gonna delete this so you guys can go back and watch that. Yeah, I watched every single month of core content and I took notes on all of them. I think the very like key thing when you're studying is to take notes. That's like the most important thing, because every time you go through the content, you'll find something that you missed before. I'll guarantee you that every time you go through, you will find something you missed. Yes, you can use power of three on any candle. Sorry, I'm just trying to read through all the chats right now. Uh, CPI tomorrow, expecting Tuesday. Yeah, so I'm expecting right now. As of right now, I'm expecting, honestly, like anything can happen, obviously, but like if we're looking at a big, like the big picture 4 hour, for example, because this would be the quote unquote big picture for the weekly candle, then I'm looking for all of this sell side liquidity, right? There's a lot of sell side liquidity. And if we're going to continue pushing higher, I truly believe that even if we push higher, we're going to need some sort of sell side liquidity purge. And so if CPI pushes lower, then that, like, honestly, what happens for CPI determines what I'm going to expect for the rest of the week, because CPI is generally known for manipulation, right? CPI, NFP, FOMC, they're all known for manipulation, right? So if we're going to continue higher, I'm expecting CPI to push lower, then we can look for higher prices. If CPI continues to push higher, then we can look for lower prices, for example. And what would kind of give me the signal that we are going to continue in a direction is that SMT divergence, for example. Uh, okay. What is my weekly bias? Weekly bias, yeah, once again, it's just dependent on CPI, and I will be live tomorrow on YouTube as well, watching CPI live. So I'm pretty sure I'm gonna start streaming a little earlier. I'll probably start streaming at like 8 or 8:15, so then we can watch CPI together, and then I'll just give you my thought process on it as we go. Um, is there currently SMT on ESNQ, or would ES have to break 66.5? I'm gonna have to take a look there. 66.5. Are you talking about the lower time frame? Yes, this is SMT Divergence on NQ and ES. Just because this high, like this is a swing point, so I'm looking at it. This could be considered SMT Divergence, but what are you referring to on the higher time frame, right? It's very important to always keep in mind you have to refer to something on the higher time frame for something to be higher probability. So if I'm on the, let's say if I'm on the 5-minute chart, I need to refer to an hourly level. If I'm on the 15-minute chart, I need to refer to the 4-hour, some sort of 4-hour level, right? So as of right now, I'm done for the day, right? Especially because today has no news. I already going into this day expecting low probability. When price moves to into a higher time frame PD array, when do you decide to look for an entry? Once again, higher time frame PD array, number one. Number two would be looking for the SMT divergence. Once we get that, then I'm looking for some sort of entry pattern, essentially. I mean, you could call it a pattern because honestly, entry models are just patterns, right? It's that higher time frame narrative that makes that entry pattern high probability. Yeah, that's amazing, Jomar. Keep going. Really, really good. I think that understanding month 6 and 7 is really good just because it gives you a long-term perspective, right? So it's like whenever I do my analysis, I'm really like, once again, if you watch my weekly reviews from like a while back, I think it was from like December, like you'll see that I always start my analysis off on the monthly chart, drop down the weekly chart, daily chart, see what's cleanest here. And then whatever is cleanest, I'll refer to that. And it's good to have an idea of what your long-term bias is, right? Because this push down from July, it makes sense because it aligns with that monthly chart where we're looking for lower prices into this fair value gap, right? From this fair value gap, we expect expansion into external range liquidity, which could be this high right here or this high right here, right? All-time highs. So that's literally I framed like half a year based on the monthly chart, internal range and external range liquidity, just in the videos I posted. So right now, because we've taken all-time highs and we're above it, I'm just waiting for SMT divergence to let me know that we could potentially go down to take some sort of sell side liquidity, which is why I'm taking like so many scalps because I'm uncertain of the macro direction as of right now. Was the biggest or final push that made me profitable or helped me become profitable? I'd just say like psychology. Like the biggest thing is like psychology. Like I understand like analysis really, really well, but at the end of the day, it's like psychology is like the biggest thing, right? It's like overcoming over trading. I would say is like my biggest thing, and how I do that is by journaling. Because if I trade too much, then I end up having to journal a lot, and that's something I don't like to do. Uh, yeah. Since you want to be a day trader, like from my like just hearing from like JCap or Kyle, he'll say that he watched core content month 8 like 20 times, and that model itself is already enough. So if you want to, you could just watch month 8, to be honest, but I still recommend you watch through all core content once at least, and then you can refer back to month 8 using all the, prior knowledge you gained from the series already. Okay, what do you think is the best ICT entry model? I don't think there is a best entry model because every single entry model or ICT concept, it all ties into market maker models at the end of the day. Just like last week, how I annotated this market maker model right here, right? You'll find your entry models within this market maker model. So if I were to say like there's one thing, quote unquote, the best to learn, it would be master your market maker models, right? -2, -2.5 standard deviations, we get that retracement. and then go higher, -3, right? And another some sort of consolidation change in state delivery, right? And then after -4 is that previous month high, which we end up respecting as support, right? Resistance turn support. How do you do time frame alignment for the indices? I have a full video on that, but essentially it's just if I'm using the daily, then I'm going daily, hourly, 5 minute, and then if I'm using weekly, then weekly 4 hour, 15 minute. Can you please do analysis on gold? Yeah, I got you on that. So my bias for gold has just been bearish, to be honest. It's just been bearish for a long time now, to be honest, because it's like on the weekly chart, I saw like when I first started doing analysis on gold, like I saw this, I'm like, okay, yeah, we're gonna get some sort of downside here for sure. So from that, I just started doing my analysis here, and so on the 4 hour right now, we can see this is essentially what I've been looking at. Is we have a bounce price range right there, which we traded into. Really, like we just tapped into it here, so I shorted here, and so we retraced back into it. I was looking for more sells, and ultimately this is my draw on liquidity for now, but I do think that if we continue lower, then we're for sure like we're gonna go lower, because it's like on a weekly basis, like we just manipulate this high out, you know what I mean, trade it into a rejection block, and every dealing range begins with a new rejection block, right? So we have a rejection block, we have an order block right here, so now we're just looking for fair value gap to the downside and stuff like that. Does that make sense? So this would be what I'm looking at on gold, right? Starting weekly profiles has really helped me in getting high probability setups in the expansion phase. Also helps me follow a system of when not to trade. Yes, very, very good. And then you can also study daily profiles, right? So time is fractal. Really, really good stuff. Since IPTA is fractal, can you use IPTA look back for intraday? Yes, I believe you can. I just personally, I'm still like kind of working on that as well, like using IPTA on intraday. But I would say, as of right now, my understanding is stick to the daily chart or 4 hour chart for IPTA data ranges. How many hours did I study per day in my peak? Well, in my degen days, probably like 10 plus hours per day. But now I've kind of slowed down for sure. I think honestly, like working and like just doing it for fun, like it's kind of like meshed together because I just enjoy doing what I do. How do you do? Oh, okay, I already read that. Do you ever trade Dow? No, not really. I don't really trade Dow, to be honest. I like NQ the most, to be honest. I don't know what it is, but I just like trading NQ because it's more volatile. What's the hex code for the blue candles? Got you. It's also in my Discord if you guys want to join that. It's optional. But you guys can ask me questions in there when I'm not on YouTube. Welcome, welcome. I mostly trade index futures, to be honest. For the rest of stuff like commodities, I stream often. I'll be streaming every Tuesday. Every Tuesday from 9 to 10:30. If there's high impact news like tomorrow there's CPI, then I'll be hopping on earlier. So tomorrow I think I'll get on at around 8 or 8:15. I forgot what I was going to say. But yeah, I mainly trade index futures, and then for forex and commodities or whatever else, like I mainly like I've been tape reading those and doing analysis on it, and uh I think index futures is just, it's my baby, so that's where I excel. Everything else is kind of like a little iffy for me. Your USD has been pretty solid though, just because I do analysis on DXY all the time. Oh, Bitcoin hit 50K. What the insane. 8:50 New York time. Yep, always New York time. If you guys have any more questions, feel free to ask, because I don't really have much to really cover today. I mean, I think I just covered what I did today, which was the trade on NQ essentially. And like once again, it's like today, like for the Discord, I said like I don't think today is a day that I would really be looking for trades. It's like it's just this so happens to be clean for some other things I use in price. But overall, like if you were watching this isn't something you would really want to trade, you know what I mean? Best way to take notes. Honestly, how I do it is essentially all I do is I put on the subtitles for whatever I'm watching, and then after that I'll just take notes on every single thing they talk about, and then organize it afterwards, and then rewatch the content. So I always watch it at least twice. So the first time I'll usually just watch it, no notes. The second time I'll start taking notes because I have an idea of where each topic resides or what the topics are. And then the third time, if I watch it again, then that's when I refine my notes. And don't be afraid to pause the video when you need to, rewind the video when you need to. That's like, because you'll miss things and you have to rewind it and take notes again. How to develop a trading plan. Uh, okay. Honestly, how to develop a trading plan. I think I would say is determining what kind of strategy you like, first of all. So it's like, for example, if it's ICT, then you can already begin creating your trading plan. So what does ICT really revolve around? It's a higher time frame narrative. So how do you determine higher time frame narrative or bias? How do you find your context? Do you have like a specific way of finding these things, right? And so from that, you go from higher time frame, that's your number one priority, and then you can have your um secondary um plan, I guess, for the lower time frames in alignment of that higher time frame. And so you can build your plan starting with the higher time frame and then looking for some sort of structure on the lower time frame. Or your trading plan can be based around liquidity. It's like, what concepts do you use the most? It's like, do you like using breaker blocks, or you like using fair value gaps? Like, you know what I mean? And then it's always very important to highlight what your risk management plan is as well in your trading plan, so that way you have something to be consistent around. What's the proper way to tape read and backtest? So when it comes to tape reading, I want to say like how I do it's like I kind of just incorporate all my knowledge into it. I think at first when you're a developing student, it's very difficult to tape read because you don't even know what you're looking for, right? So the number one step to even begin tape reading, in my opinion, is to find hindsight charts and annotate them, right? Because if you don't even know what a setup's supposed to look like, how are you supposed to anticipate them, right? So number one is find a bunch of like at least 50 hindsight annotations. Like that's like the bare minimum is 50. I would even say like 100 or two, like 150, like, like you should be doing a lot of hindsight annotations, and you should feel like if my setup's there, it's gonna be so painfully obvious to me that I'm gonna take it every time. You know what I mean? So that's step number one, is hindsight charts. Number two is you can begin like back testing and looking for your setups, and from there you can develop that eye training, I guess, to spotting your setups. And then number three is this you can do like even from the beginning, while you're doing backtesting and hindsight annotations, is live tape reading. Just watch the market, right? You don't necessarily have to like trade. Just watch the market and see what's going on. How does the market specifically react to different things? For example, you should be going into these sessions with intent. So if I'm going to a session right now, like tape reading, I'll be like, okay, right now I'm trying to learn how to trade turtle soups. Okay. So where do these turtle soups usually occur? What time? Within where on the higher time frame? How does lower time frame structure look like when these expansions occur and stuff like that? Then you'll start beginning to annotate these things in your hindsight charts, and while you're live tape reading, you have expectations as well, right? So then you can begin looking at price as it's printing live, and you'll be like, oh, okay, well, whenever we get um for example, okay, whenever we get a trade below a low, we should see quick displacement higher, indicating that this was a turtle soup in the first place. So now that we get turtle soup, okay, what time did this occur? Oh, this occurs at 9:30, where we're expecting the Judas swing, right? So this right here should be manipulation because it's a turtle. I'm looking for turtle soup entries, right? And it's manipulation is what you're entering on. So this should be manipulation. So you start beginning to anticipate these things. It's like, okay, so if this was manipulation, then I see a new dealing range forming. This can be the start of a new dealing range because we have a rejection block right here right away, looking for that order block. Okay, once we take out this high, or this right here, we form a new order block, for example. And so that's how you start like tape reading, anticipating for price movements, if that makes sense. Right. And another thing is that very important, like there's very important to track these kind of statistics where it's like, how long does your trade usually take to play out? How long does it take for it to start expanding? What don't you want to see in your trade that makes it usually fail? For example, it's like, for example, like the unicorn model that I presented that I used to use a lot is like, whenever I see price trade back into a unicorn, I don't want to see price trade below the breaker. Even if it wicks below the breaker, I deem it as low probability instantly, because that breaker and fair value gap should be holding price higher or lower, if that makes sense. And I want to see quick displacement, because if the unicorn model is going to be one of the strongest institutional order flow entry drills, then we expect price to just instantly expand from that point. That makes sense. So it's like you have to understand all these different statistics of your model, and you have to know it like the back of your hand, so that you know if this is happening, you build that discretionary feel for your model. Because at the end of the day, it's like, if you can fully like make your model mechanical, like why don't you just get a trading bot? And that's the difference between us humans trading and a trading bot, is that we have that discretionary feel, which is our edge in the market essentially. Kind of went on a rant there. Um, I hope that was insightful though. Imagine you're bullish and above midnight open, but PD array above. Okay, let me just draw this out. Okay, so imagine you're above the midnight open, but PD array above it too, below 9:30. PD array above it. Let's say there's 9:30. Below 9:30. Would you trade from the PD array? So it's like if it was like this, for example. Yeah, you can use this for sure. It's just high. It's just like you want to refer back to like, let's say this is like New York AM session, right? So it's like during London, like during Asia, you should get accumulation. But for London to kind of put in that low of the day, and we're going higher here, for example, then we have Asia, right? It just generates liquidity for the day. London, you're looking for the low of the day, for example, or higher of the day. And then we trade back above the midnight open, and then we trade under the 9:30 equities open into that PD array. And then you can look for higher prices. That makes completely sense, right? Once again, it comes down to higher time frame narrative, right? So always pay attention to your higher time frame narrative. Uh, I do see these lows right here. That looks pretty clean. And then we have SMT on the highs right here. So just some things that you guys can look at while we're live anyways. I struggle mentally to find new gems to study, and I feel guilty for not working. I watch ICT content a lot and take notes, but are things that I already know. What would you do? I would say it's not always about consistently learning new things. It's about refining what you already know, right? Like if I understand correctly, you already understand majority of the things ICT teaches, right? And you know about a lot of things, you can't find any more gems, then you already know a lot. It's time to start refining and building a trading plan, right? Like I can understand like a bunch of things, but at the end of the day, all my model is just higher time frame PD rate, SMT, inversion, fair value gap, balance price range, fair value gap, right? It's like it's not it's not about learning new things, it's about refining what you already know. If that makes sense. And as Casper or Jesse taught me, simplicity scales, complexity fails, right? Okay, that's good. So I would just like stick to what you know right now. And since you're already profitable, right? Just be consistent with it and stick with it. Do you know of any prop firms for commodities, gold, oil? I know Top Step you can do crude oil futures. Um, I'm assuming like futures firms, like you can just trade all the futures contracts, right? So like gold, oil, you can do that. Um, for other firms, like for example, FTMO or just those the ones with SCFDs, like you can also trade commodities. How much time did it took for you to live trade with ICT Concepts? I started live tape reading trading like since day one. Really, it's just like I wanted to put in the screen time while I'm studying at the same time. Do you use DXY analysis for trading the indices? And also, what is your? Yeah, I do use DXY. So I look at DXY macro scale, like which direction is DXY gonna go, seasonality wise, what's it likely to do, and then that would be inversely correlated to the index markets, right? So if right now, for example, DXY, I'm expecting it to be bullish, then I'm expecting index futures to be bearish. How do you enter in a turtle soup trade? I feel like honestly, my understanding of it right now is like I just enter on SMT Divergence, and if I don't get SMT, like I don't get the higher, lower, low on a specific market, then I'll enter on a PD array. And that's how I like to trade it. It's definitely still something I am studying. So as of right now, I don't want to elaborate on it too much because I don't want to mislead you guys. Yeah, what's up, Tiger Market or Gary? I'm just gonna call you Gary. How much percent does the unicorn give per month? Just a rough estimate. Uh, honestly, it's really dependent because like sometimes you'll find like one trade a month or like four trades a month, right? So I would say like around 2 to 4% is what I usually aim for with the unicorn model per month. That's per month on a monthly basis. Do you trade inversion fair value gaps? I do. I think I answered your question already, Max. So I'm just gonna I do use DXY analysis. So if that's your question, you can just rewind. Do you trade quarterly theory? Yes, quarterly theory is the framework of all my trades. It tells me when to trade and when not to trade. Yeah, I understand the mental block of like wanting to learn everything. But at the end of the day, it's like you don't need to learn everything. It's like, why are you learning new things? It's like you just enjoy it. If you just enjoy it, then you can learn it as entertainment, right? But it's like if you keep adding new things and making your model more complex and stuff like that, then you'll end up like you could potentially shift your model right now into something that's not profitable. So that's something to be careful about. Yeah, one of the three correlated assets will always provide a turtle soup. What advice can you give a trader who uses ERL and IRL and time factor and power of three? Honestly, internal external range. Once again, that higher time frame just frames your trade, right? So it's like if you're looking on the daily chart, last week we had this internal range liquidity tap into. Actually, I'll show you guys something that was for the Discord. Right? And this is what I showed you guys last Tuesday as well. It's like we were in a daily fair value gap. We get SMT divergence that indicates that we could be getting a smart money reversal. From here, I draw my projections out for this market maker model, right? And then we start trading higher. And from this phase of accumulation, we get another SMT divergence indicating that the market is going to continue higher in this market maker buy model. So from here, we can look for longs up into external range liquidity, right? Daily internal range liquidity to monthly or daily high. So you can look at previous month high, or you can look at it as a daily high as external range liquidity, which is also time-based liquidity. I put previous month because that has more significance over a daily high. So from here, we can now look, how does price react to previous month high because it's a time-based liquidity, right? So from here, we're treating it as support. And so we can look for higher prices because we're treating time-based liquidity as support. I hope that makes sense. So I guess the advice would be look for market maker models when you're using external internal range liquidity, right? So like we took external range liquidity, I can potentially see, not saying this is happening right now, but I could potentially see like some sort of market maker sell model because we took external range liquidity. When we tap into internal range liquidity, we can potentially look for a buy market maker buy model, right? So that's really what I'm looking for. And so using power of three, it depends if you're using weekly power of three or using daily power of three or 4 hour power of three, right? Because time is fractal. So depending on what power of three you are using, then just look at the open price and you want to buy below it and you want to sell above it. How to know if it's AMDX or XAMD? I generally wait for Mondays to play out first and then see what the rest of the week could possibly be. So it's like, and also it's like looking at the economic news calendar, right? So it's like if I'm looking at the economic news calendar and there's no news on Monday, then I'm expecting Monday to accumulate automatically. So I can already expect that AMDX, for example. What am I looking currently for indices? That once again, I'm gonna have to wait for tomorrow's CPI. Right here we do have an SMT divergence again, so I would be looking at this now. I always only pay attention to the most recent SMT divergence. Got you. What these streams are for you guys to ask questions, and I'll try to answer them based on my experience. Also, if you notice, right, once again, we have SMT right here. Then on ES, this would have been a turtle soup, for example. All right. With that said, any final questions? I think I might be ending the stream here. I grab some lunch. All right. Well, thank you guys for coming by. I'm gonna end the stream here, and I'll see you guys tomorrow morning if you do stop by. Uh, either 8 a.m. or 8:15. So before going, give a word of the day. Uh, I think I would have to say consistency. That's the word of the day. All right. Take care, everybody. Yes, you can trade the CFDs for index futures. For Max who asked. They're pretty much like they just work. They move in the same way. I would just do my analysis on the futures market. So it's like if you're trading a CFD like NAS 100 or S&P 500, then look at the analysis on NQ and ES, for example, and then trade according to that. But yeah, see you guys tomorrow. Thanks for coming by.